All right. So we're just going to take a look at three markets: the YM, the RTY, and the ES. So we have the YM on the left, RTY in the middle, and ES on the right. And you have basically a higher time frame and a lower time frame. But instead of time frames, I'm using brick size, using Renko bricks. So you have uh, basically a higher time frame or higher brick size on top and a lower time frame or lower brick size on the bottom. All right, that's the way you want to think about it. Now, all we do is just take a look at some turning points, and you'll see the turning point and what happened on it. You could do this turning point analysis on any type of chart that has a turning point: bar chart, candle chart, any type of chart. It's really very similar in that the dynamics are pretty much the same. So I wanted to take a look at what happened here on the ES. Alright? So it's important that take a look at the ES because it's a lot of volume there, and a lot of volume sticks out like a sore thumb. Alright? So what we see here is what the market makes a higher high. When it starts making these higher highs, I want to look for a spring. When it start making lower lows, I want to look for upthrust. It's a very simple springs and uptrends, an upthrust and downtrend strategy. You see that it made a higher high. So I'm looking for it to take out this low, and in this case, it did take out the low, and it went pretty low in that it tested this base. And these types of bases that go down, up, down, if you look at them up, a lot of times they'll have the price volume characteristics of some type of accumulation or distribution. This hinge type of behavior, a lot of times it has all that. For example, this volume here, at that, when it tagged that accumulation area, is quite high. So I want to see why is the volume so high? Okay. And the other thing to note is that it sprung or took out these lows. So, I mean, just take a look at this. You have this up, down, up. You have new longs right here. And what happens to them? They get stop run. Why? Because this market is saying, yes, I can go higher. Why? Because I made a higher high. What happens next? Strong hands get interested. So what are they going to do? It made a higher high. Let's take it down so I can buy low. And then when it makes another higher high, I can sell high. So this is the evidence to them that, yeah, market can go up. Now, what you want to do is bring it back down and load up. So you want to see what happens on this test, and see what the hell happened here. Alright. That's exactly what I'm looking for, and I know, I know this like the back of my hand. When the market came to that level and tested, what happened? Buying happened from the lows. There was buying over here as well, and they're buying the break or whatever this is. They buy low right here, this giant print. And then when they're done buying on the way down, what do? They buy on the way up. Alright, so see how much volume that is. 35,354 times 100. And that one break was the biggest break in, the biggest up break, at least, in well over 100 bars. And then what does it do? It goes up, alright? It just goes up, alright? So boom, right there. So I don't want to look at all this stuff in isolation, because you know that's how errors are made. You have to like connect, right? And by connecting is just a higher time frame level to lower time frame behavior. So on the lower time frame, it tags this level, takes out the prior low, has this volume, and this is what's called volume off the bottom. Why? Because it goes from the bottom on up. It's buying volume off the bottom right here. Market goes up $4, pulls, and here's where it gets interesting. When the market pulled back up, how much volume? 35,154. I forgot what I divided this by, but it's a lot. I don't know if I probably add 2 zeros to it or something. Now that alone by itself doesn't mean jack, alright? Because any bounce can be sold. Like if you see markets, I mean, they always do this. They go down and then they pull back. So a lot of times there's a lot of volume on the pullback. There's strength on the pullback. But what happens? It gets sold. So now we want to take a look at the attempts, the selling attempts, and what happened. Because if those attempts can hold, that's a very bullish sign. Over here at 6,679. Now look at the rally, 35,000. Look at the pullback, 6,000. 35, 6. It's between 1/5 and 1/6 of the pullback is a little bit more than 1/5 of the rally. And then what happens? It starts going sideways, and finally there's some effort here, and it goes up. When it goes sideways like this, is a very bullish sign. Why? Because it's building a base. Why else? Because there's multiple attempts to go down. In any base, there's multiple attempts to go up and down. So we can interpret these as attempts to go down that failed. They're unable to go down, they're unable to take out the low, and their volume is shrinking. After that, once the base is formed, it has enough of a base to rally. All right. So what does this mean? Well, volume off the bottom. You got your change behavior. And you have your lack of demands. There's multiple lows here, have no supply. 0. And then you have some confirmation. The only one thing I don't like is that, I mean, it's probably a good thing, but like it could have gone a little bit lower and fulfilled the low, wiped out these lows here. Okay, and to some degree it did, because if you take a close look, it did what? It did a spring. And from that spring it made a higher high, so I should have kept that in mind. Anyway, so long story short, how did this turn happen? Well, the first thing is, on a higher time frame, you have buying pressure. That buying pressure makes a higher high. Okay, very good. Then you have the move that pulls back to what area? The origin. The origin of the move. That's a very strong place for buyers to come in. Very strong. After making that higher high, very strong that the origin will be supported. And it is. You see the heavy volume there. And you have a reversal and bang, bang, bang. It just goes up. All right, I think that's enough for today. One of the things you can do, especially if you trading or whatever, is start analyzing turning points. All right, by using the higher time frame turning point, and then looking into it and seeing what's going on the lower time frame. You could do this with any higher time frame, lower time frame combination, and you'll start seeing that many times it's visible what is going on, and it's the same thing over and over again, or some variation of the same thing.